Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan for the week ahead, looking at some high probability action areas and some price targets to factor in to our trading this week. Before we jump into the charts and the technical review, let's take a look at where we are from performance, market dynamics, market narratives, and the internals as we set up for this holiday shortened trading week. US markets will be offline from the futures will be offline from 1 p.m. today, Eastern Standard Time, reopening at 6 Eastern Standard Time. So, holiday shortened week, less participation today. Obviously, we could see a little uptick in the volatility we have already witnessed. Before jumping into that, let's see where we are in terms of the S&P's performance last week. Basically consolidated near the highs, and no real clean trends as such last week. The index kicked off in terms of the cash market around the 69.28 level where we closed out the week prior, and finished basically flat to slightly higher in around 69.40 on the cash side of things, and basically put in a marginal advance on the week, up 0.2%. In terms of the overall view of things, early in the week, the market pushed up towards fresh highs with the S&P trading up just shy of that 7,000 level intraday. And as the week progressed, price action turns more choppy and range bound, with buyers still showing up on the dips, but momentum fading pretty quickly on the rallies. And Friday was pretty emblematic of that, where we had a quiet, slightly negative session with the S&P down 0.06%. So net net, it was a digestion week, strong enough to hold near the record highs, but not strong enough to extend sharply, suggesting that the market was absorbing gains rather than pushing to new highs as such. Now, as we come into the week and the weekend headlines, obviously Trump has once again taken the spotlight with these tariffs that he is looking to enact on EU countries, those in support of Greenland's independence. Obviously, Trump is pushing to annex Greenland, and that is having implications for the EU and for NATO, given the Danish position with respect to Greenland, and so that's really driving what we have seen overnight in terms of the gap lower in the markets, and a relatively risk-off sentiment as we kick off the week. Gold and silver obviously printing higher overnight as they benefit from this risk-off tone. So the primary question really going into the week is: are we going to adopt a meaningful risk-off stance due to this renewed US-EU trade war rhetoric, and see elevated geopolitical risks? Also, we still have Iran on the periphery as well. That situation continues to develop, and so it's going to be those are some key risk factors as we start the week. And so, turning to the calendar for the week, obviously, like I say, US offline today, Martin Luther King holiday. And then no US data of note on Tuesday. In Europe, we get German PPI, ZEW, and we'll hear from ECB's Nagel. So nothing really to meaningfully impact US markets on Tuesday, apart from obviously the geopolitical headline risk. And then we head into Wednesday now. We have the Davos meeting taking place in Switzerland. And lo and behold, we have Trump due to speak on Wednesday, and that is obviously going to garner a huge amount of attention, given the current stance that he is taking over Greenland, and basically will be taking his views to the home turf of the EU countries. So that, I think, is going to be a pivotal day in terms of potential volatility. And will we see another Trump taco move whereby by the end of Wednesday everything's resolved and some sort of deal is put in place that gives Trump, to a large degree, what he's looking for without the EU having to completely completely submit to his wants. So we'll have to see how that develops. The Wednesday price action is going to be interesting. Then heading into Thursday, we get US GDP looking for 4.3% print there versus 3.8% last time out. Initial jobless claims, and then we have PCE data as well due on Thursday, and obviously crude oil inventories. Then heading into Friday, rounding out the week, we get S&P Global Services PMI for January and the manufacturing PMIs. So that's what we have in terms of the data slate. In terms of the internals and where we sit, we have we had an interesting situation or interesting developments given last week's price action, because we actually had breadth expanding pretty nicely, and advanced decline line actually hitting all-time highs. So the broad-based participation in the market is actually developing, obviously prior to the risk-off tone we've seen this morning. One thing of note, though, has been this theme that I mentioned last week, is the rotation out of mega cap tech. We were seeing some strength in the small caps and even in the Dow last week, as like I said, this broadening out trade continued to develop. We'll see if that continues to be a theme this week once we get some resolution with respect to this tariff situation. In terms of the actual under the hood look, stocks trading above the 5-day moving average, sits around 57%, so pretty neutral there on the shorter term view. But in terms of the 200-day, so the longer term perspective in terms of the market breadth, well, that's at 12-month highs now, sitting at just over 67%. So this may be what this momentum may see some continued support to be persistent in the markets, even though we are seeing a little bit of a pullback to start the week. So let's take a look at where we are in terms of the setup, given the technical picture now, and see where we might find opportunities as the week develops. So from a technical perspective, on the momentum side of the house, so looking at the volume weighted average price on the weekly and the daily time frame. So on the weekly, we were bullish. We closed last week bullish. So the weekly VWAP sits at 69.69. So we're trading below there at the moment, trading 69.04 here. This is just before the US morning on Monday. So we are trading below that 69.69 on the weekly. So that, if we close below there on the week, would see a shift in momentum on the weekly time frame. In terms of the daily time frame, we are sitting well below our 69.79, which is the 5-period volume weighted average price there. So we need to see a daily close back through there to suggest that momentum is going to resume to the upside. So keep those levels in mind. And then on the monthly volume weighted average price, another level to keep in mind is 68.50s on the downside. So the monthly VWAP remains bullish, but any close on the month through 68.50 would flip that momentum bearish. In terms of market structure, we're in balance given Friday's close. So 69.23 to 70.25 is the balance zone. Obviously, if we get a close, if we trade through there today, we will we'll be looking at one time framing down on the daily perspective. Weekly also balanced 69.23, 70.25, same setup. On the monthly structure, we are still one time framing higher than 67.75 as the monthly structure there. So keep those levels in mind. In terms of what I'm looking at with respect to my weekly bull bear zone, we're actually trading pretty much at it at the moment. 6,900 to 68.90 is the area of interest for me as we start the week. In terms of our weekly range, given implied volatility, we have a upside of 70.47 and we are trading right at the weekly expected move to the downside at 69.03. So this is the key test here as we open up today. Can we regain the volume weighted average price on the intraday time frame? So I'm using hourly time frame here. VWAP, we've struggled to gain any momentum above there, so that comes in at 69.13. So in terms of a rejection and a reclaim scenario for the weekly bull bear zone, we really want to see acceptance back over the 69.13 to suggest we have a tradable low in place. First area of resistance is going to come in at the open from last night, so around the 69.30. Again, if we can start to see acceptance above there, then that would build momentum to the upside. But whilst we trade below there, I actually see the potential for another leg to the downside to actually undercut the lows that we saw into the first full week of trading. So the 68.60s, remember we have that 68.50 level in terms of the monthly structure and the one time framing. So we could see consolidation now into the shortened trading session today. But I anticipate we maybe get another leg lower, certainly into Wednesday. Maybe Wednesday is where we see a more tradable low in place, and then we could look for a more meaningful corrective phase to develop. So if we can hold that 68.50s, then I would suggest that we can take a look at the value area low for the past 2 weeks, which comes in around 69.50s. And then we'll see if higher time frame sellers are going to step back in and try and take us lower, or we have a more meaningful corrective low in place, because that would extend through the current ABC corrective target 70 versus 70.17 at 69.04, which we're trading at the moment. So we'll see if we can hold there, but certainly that 68.70 to 68.50 is going to be key if we see another leg to the downside. If we take that area out on a closing basis, then we want to be thinking about a move down into 67.90 would be an extension target to the downside. We have monthly projected range support coming in just above 6,800. So we'll see how the price action develops as the week progresses, but initially we are testing the weekly bull bear zone. We are finding some support there at the moment, but again, we really want to see acceptance above the VWAP and above the 69.30s to suggest that we have a more meaningful low in place. Otherwise, I do see potential for a test down into that 68.70, 68.50, which will be pivotal, especially heading into the Trump speech on Wednesday and any potential side meetings that he may hold that could provide some short-term resolution here. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.